Hi there, everybody. Jason Moser here, analyst with Motley Fool One. Joined here today with Matt Argersinger, who is one of our portfolio advisors at Supernova. And Matt, at Supernova Odyssey, right?
That's right.
Okay, not Odyssey Phoenix, folks. It's Odyssey. But we are thrilled today to be joined by Spencer Rascoff, the CEO at Zillow, which is a recommendation, actually, in one and in the Odyssey portfolio as well.
That's right.
The stock has performed very well for us, Spencer, so thank you for that. But this is sort of a unique opportunity. We're able to talk with you today about the third quarter release today, the earnings release, and so we appreciate you joining.
Thank you for having me. I'm looking forward to the discussion.
Yeah, this will be great. So let's just get right in. I was able to make Zillow the stock of the day here at the Motley Fool, and what we continue to pay attention to with Zillow and other style of growth companies like this is really focusing on the top line revenue growth and the unique users that you're bringing into the site, because really those are the indicators to us, I think, that you're doing or what you're doing is working. And judging from the numbers here, it really looks like you scored on both counts with top line revenue growth, a little bit more than $53 million. It looked like almost 64 million monthly unique users to the site on mobile and web. So by every measure, it looks like you really scored there. Can you give us an idea, what do you all look like when you're looking at the metrics for your company? What are y'all focused on other than those two metrics, or is it those two metrics?
Well, you're right that traffic, broadly defined, is probably the most important metric for any media company. So for Zillow, we report on our unique users, and this quarter unique users were up 69% year over year. I also look at a lot of other metrics which we don't make publicly available, including listings page views, which is a good indication of how many of those users are actually serious home shoppers. That number's up over 80% year over year this quarter. I also look very closely at leads to real estate agents. That's a really good indication of how good a job are we doing connecting consumers with real estate professionals, with advertisers. Revenue for the quarter was up 67% year over year. A lot of it is because the audience is growing so quickly. Advertisers follow audience. We've been saying this now for the 3 years that we've been public, and Zillow has the biggest audience on the web for real estate shoppers, and that's why our revenue is growing so quickly.
Great, and of course, a key component to your business is the Premier Agent business, and that was up 68% in the quarter. I believe you're around 44,000 subscribers in that space now. Just want to ask, what do you think is the market opportunity there? 44,000 seems like a really big number. What can that number actually get to? And then finally, your average revenue per subscriber, $264. Obviously, that's grown tremendously over the years, but it is down slightly year over year and slightly from the prior quarter. If there are any reasons behind that you'd like to share, love to hear about that as well.
Yeah, so ARPU is down slightly, and what you have there is, as more agents come on during the quarter, the count of the agents is included in the calculation for the quarter, but their revenue doesn't fully serve in the quarter. So because we're adding new agents at such a rapid clip, really faster than we've ever added new Premier agents before in the history of the company, that tends to drag down ARPU a little bit because of that timing issue. ARPU is really an output, not an input. It's not something we manage the business to, but hopefully that helps explain a little bit sort of why that metric moves around quarter to quarter and year over year. Addressable market size for our agent advertising business, that is the $64,000 question on the stock, frankly. And if you look at our agent count of 40-something thousand Premier agents, I really think that's not the best way to look at it, actually. The way we look at it, the way I look at it internally, is what is our total revenue from agents as a percentage of how much they spend on advertising. So we're at around $120, $130 million revenue run rate, annualized revenue run rate of advertising from agents. Agents spend around $6 to $10 billion a year on advertising, and they collect $60 billion a year in commissions. So we have a tiny, tiny fraction, sub 3% wallet share. Agents spend a huge amount of money through other channels, not with Zillow. And I think over time, a lot of that budget will migrate to where the audience is, which is Zillow. Zillow is the biggest real estate site now in all 30 of the 30 largest cities in the US. We're the largest nationwide, we're the largest on mobile, and eventually advertisers will follow that audience.
Okay, great. So just going back to a little bit of what you just said there, I liked what you said with advertisers follow audience. I think that's exactly right. They want to go where the eyeballs are, and you guys are obviously a place where the eyeballs are going. If we look at your historical product mix, okay, separating the money that you make out into advertising dollars and then the marketplace segment, and it seems historically it's been about 25% of your money is advertising, and then the other 75% of your revenue comes from that marketplace segment. Given the idea that advertisers follow audience and that we know that your traffic is growing, do you all have any sort of future projections or ideas or goals as to where that product mix will be in 5 or 10 years? I mean, should it always be around 25% to 70% or 75%? Or are you looking to make that closer to 50-50, or do you have any ideas or goals there?
Well, when you say advertising, I think what you're referring to is our display segment,
Correct,
which is
yeah.
branded advertisers like Home Depot or
Exactly.
a Bank of America or a Sherwin-Williams Paint. I think over time that will continue to decline as a percent of our total revenue. Now, it's still growing very quickly on absolute terms. In fact, this quarter it was up over 50% year over year. But display revenue as a percent of total revenue should continue to decline as our Premier Agent advertising, our Premier Agent business continues to grow, and as our mortgages gets even bigger, and as our rental business grows. So as I look further out at, say, 500 million or $1 billion in revenue, at $1 billion in revenue, I think display will be a much smaller percent of that total, and the biggest segments at that point will be real estate agent advertising, our Premier Agent business, mortgages, and rentals will be the 3 biggest line items at $1 billion in revenue.
Great.
So switching gears a little bit, we've seen interest rates come up a lot since May, really since the Fed kind of started hinting at tapering, and of course that hasn't happened yet, but all the same, interest rates have come up, and at least on a headline basis, we've seen a little bit of a slowdown in the mortgage market, in refis and things like that. Looking at your numbers, it looks like higher interest rates haven't had an effect on Zillow at all, but will higher interest rates eventually, do you think, affect your traffic as especially new home buyers, shy away from looking for homes given the expenses? Do you see that as a major risk factor for Zillow going forward?
We have not seen an impact on our business because of changing mortgage rates. And the reason is that home shoppers that have been sitting on the sidelines for a couple of years, waiting for home values to bottom, trying carefully not to catch that falling knife, they're much more interested in the fact that there's limited inventory out there and there's a lot of competition for home transactions than that mortgage rates have ticked up a little bit. So it hasn't impacted the home buyer psyche very much from our perspective. Home values overall are up about 6% year over year, and Zillow forecasts another 4% increase from here over the next 12 months. There are some parts of the country that are appreciating too quickly. So Las Vegas, Phoenix, San Francisco, Sacramento are all appreciating at 20% or more year over year. We'd like to see those appreciation rates slow down a little bit because we're actually pushing up against some of the all-time highs, believe it or not, and reaching levels that are sort of challenging ordinary understandings of affordability. So we think those rates of appreciation will start to come down. They're already starting to come down in some parts of the country. So I'll give you another perspective here. In July, all 30 of the 30 largest cities were appreciating. Today, 15 of the 30 largest cities are actually showing month-over-month declines in home values. So there's been sort of a tapping on the brakes a little bit, which has slowed the housing upturn down a little bit, which is actually good.
Great. Now, Spencer, I just want to jump back for a second here. You said something about rental, which sort of stoked a question that I wanted to ask earlier. And really, when we look at the way this housing market has played out over the last decade, I mean, it went from just big-time boom to big-time bust, and we're seeing home ownership rates coming back down, hovering around 65% and seemingly declining a little bit, understandably. But the rental market is always going to be in demand. It's always going to be relatively robust, I think. So, you jump back to your Hot Pads acquisition there, the little company in San Francisco. I like the direction the business is going in that you're bringing more rental under your umbrella there. How big of a part of your business in 5 to 10 years is rental going to be?
Rentals is going to be a very significant part of our business. We already have over 10 million monthly rental shoppers using Zillow. ComScore says we're the largest rental site on the web. And we already have more than 1 million monthly rental leads, which is actually more leads than we have for sale leads. So by that measure, we're actually a rentals service, not a for sale service. The thing is, we haven't ever hooked up monetization to this gusher, and we're just starting to do that now. So starting this past summer, we started actually selling on a paid inclusion basis to multifamily property managers for apartment buildings. And we're still in the very early stages of monetizing this marketplace, but we're very optimistic about its market potential. There's a $7 billion addressable market here in rental advertising and software purchases that we're going after, and we're in the very, very early stages of it.
Great.
So Spencer, I wanted to ask you a little bit about the competitive landscape that you guys are in. You know, Trulia went public last year. We've heard rumors that Redfin is probably going to go public fairly soon. A lot of people consider those your direct competitors, fair or not. Just want to know, when you look out at at some of your competitors, do you look at, say, Trulia or Redfin and say, these guys are doing something right, we should take that away for our business? Or do you kind of just ignore that and say, we're managing Zillow to the best we can and focused on just doing what's good for Zillow and not necessarily paying a lot of attention to our competitors?
Well, philosophically, we have taken a page out of the Google Amazon book, which is focus on your consumers and on being innovative and on your employees, and don't overly focus on competitors. So we certainly keep an eye on competitors, but we do not let competitors drive product strategy, product planning, or really anything about the day-to-day or month-to-month of the business. It's important to keep some perspective, though, when you think about competitors with Zillow. Zillow is a lot bigger than those other companies that you mentioned. So on mobile, for example, we're twice as big as number 2 and 4 times as big as number 3, according to Experian HitWise. On desktop, we're significantly bigger and growing a lot faster. So while we do have competitors, Zillow is absolutely the big dog, and and we're getting bigger, we're gaining share, and our competitors are falling behind.
Do you think that's so? I really love your mission statement. Your mission is to build the most trusted and vibrant home-related marketplace. And I'm just wondering, looking out, say, 5 years from now, do you see that is still the mission of Zillow, or do you see maybe the business going in a different direction, or even maybe broadening its mission?
One of the most gratifying things about Zillow is just how little we have wavered from our original mission. When we all started this company 8 years ago, it was to empower consumers with access to information so they could make smarter decisions. And that hasn't changed, starting with the Zestimate and then adding in for sale listings and foreclosure listings and adding in historical estimates and forecasts of what's going to happen to home values and adding in other types of photography. I mean, it's all been thematically just very consistent. Empower consumers with information. As we expanded into other businesses like mortgages or rentals or home improvement, it's all been with a common strategic theme of empowering consumers with information. So fast forward 5 or 10 years, I think this company will firstly be significantly more mobile. It's already 60 to 70% of our usage is mobile. Probably 5 or 10 years from now, it'll be even more mobile. I think you'll see big businesses from rentals and mortgages. Mortgages is already a small business. Rentals is a tiny business, and those will become bigger businesses. And I think you'll see the brand StreetEasy a lot more significant in New York. We acquired StreetEasy 2 months ago for $50 million. It was already the market leader in New York, but it has so much more potential. And we're bringing a lot of the Zillow expertise from a product development and branding standpoint to the StreetEasy property. So for example, StreetEasy is just getting started on mobile, and we've seen how impactful mobile has been to the Zillow brand, and we think that there's just a lot more opportunity for StreetEasy to become even more critical to New York home shoppers as we improve its mobile offering.
All right, great stuff. Well, Spencer, we know you're really busy, and I think that's about all the time we have for today. But for everybody here at the Motley Fool, I just want to say thank you for taking the time out to speak with us today. This was enlightening, educational. Congratulations on another great quarter. And I, for one, hope we can certainly do this again next quarter.
Yeah.
Thank you very much.
Thank you. Best of luck.